Investment portfolio update for our family office, November 2022. Boy, oh boy, oh boy, times are weird. They're getting very, very weird. Let's buckle up. Let's strap in and see what's going on here. The everything bubble. So we have the phase two that will be happening in, I've been talking about for a while now, of what this next phase looks like. After that, everything bubble crashes and everything implodes. What does it look like? What will actually happen after that? And how do we go into that world? Because I believe that will happen in the next couple of years here. So what will happen in phase two of our investment thesis after the crash comes through and wipes everything out? We will loan against our assets. And right now I've been talking a lot about hedges, insurance, literal insurance, and then figurative insurance. So gold, silver, Bitcoin, commodities, things like that. Insurance that will pay out. It will increase massively in value in the coming years because those are insurances on your wealth, insurance on your money. And that's where gold and silver tend to hold your purchasing power. Bitcoin that has shown to increase your purchasing power over time massively. So we have it's spread out into these other assets, so that because we don't believe in the system's collapsing. If you studied it at all, the system is completely collapsing in and on itself. And the elections yesterday again just show you again the country. I remember 10 years ago, again my big aha was, oh my goodness, we are a socialist state, we have socialized medicine, and we still elected the same people to continue doing more of the same. So the American people have shown, as Jonathan Gruber said, they don't excuse me, they don't understand what's happening. They're voting for more free stuff, which means taking from the producers, giving more to the consumers, and that's going to continue, unfortunately. And it's a sad day for free markets, for capitalism, for freedom, for liberty, and it just across the board. And we can have these arguments. People can argue with me all they want. The history has shown us this over and over again. This always ends badly. The way we are going, this has been tried before. We're doing all the same things. Nineveh, Sodom and Gomorrah, Tower of Babel, on and on and on. This is just the same story is playing itself out. And the last 10 years has been really an enlightening moments for me over and over again of, wow, got to get out of the system, got to get myself independent, resilient. 2020 was really the big nail in the coffin of, wow, got to get completely out of the system. And I don't want to be in the system. I do not want any part of what's going on. Eventually there will be time to do it when things get flushed out, but things have to get flushed out. And that's what I believe. And I just think things are so insane. I'm not some genius thinking I can do algorithmic trading and beating all these people and doing all this stuff. That's a fool's errand, I believe. So again, we will sell or lend against, hopefully, a portion of our assets as our insurance goes up and pays out. We will raise cash positions 10, 20%, 30% lending against those assets because we don't want tax bills. We don't want to be paying capital gains taxes. So we'll take that cash and then invest in apartments and self-storage facilities, self-storage facilities through syndications, private placements, limited partnerships, and also buying dividend-paying stocks, good dividend stocks, and lend out other cash as hard money and private money lenders to other real estate investors. Each of these investments, here's the key, will pay us a cash flow each month. Cash flow is king. People that are continually buying for appreciation, as Robert Kiyosaki has told all for 25 years, that does not work. And we're seeing the contagion in the crypto world and all the world right now. If you're going off of appreciation, just thinking you can sell to the next fool, you, at the end of the day, are the patsy. You are the fool. That does not work. You have to invest for cash flow. That is it. Appreciation that's the icing on the cake. Investing for investing for the depreciation, investing for the amortization, and investing for cash flow, number one. And the appreciation, the fourth one, is that's the icing on the cake. That's hey, wonderful, that's awesome. But we bet on cash flow first. We want cash flow, and that's what provides us our lifestyle and really the true safety and security that people are looking for, and the freedom ultimately. So again, we'll lend off against those assets, and we will live, and we'll pay our interest expenses on that lending, and we'll live on the difference. So make your cash work for you. Money should be working. Again, this is not a beginner, I guess, process or strategy necessarily. You have to be good with debt and understanding what's going on here. And this is what we're going to keep talking about and keep explaining going forward in the frameworks that I have. Money should be working for you, so you don't have to be working for your money. Rule number one of Rich Dad Poor Dad by Robert Kiyosaki: the rich don't work for money. They work to acquire. The rich work to acquire and or build assets that pay them and provide jobs to others. For now, this is the plan in a credit or debt-based monetary system we find ourselves in. If for some reason this changes and we are in a deflationary monetary system based on hard assets attached to our money, then this plan will most likely change. And again, here's our the breakdown, just the pie chart of the assets we're going to walk through here, the different asset classes. So just so you can see just how this is changing a little bit from month to month, and the current portfolio allocation. And again, a lot stored up in liquid assets, just to be nimble, and very little tied up in the system. The stock market, paper, it's 2%. Don't carry any bonds. That's been a crushing trade. Stocks have been getting crushed, and really gold and silver is a thing that's kind of flatlined, just kind of held. Basically, it's somewhat even on the year, and real estate's gone down even, things like that. So your Bitcoin has gone down, obviously a lot less than all the other altcoins, scam coins that are going on. Because again, there's only Bitcoin, and then there's nothing else. There's not, oh hey, what about this coin? No, there's only Bitcoin. That's it. That's the only money. As Michael Saylor just tweeted out this morning, if you're earning yield or if you have counterparty risk on your asset, it's not money. That's why Bitcoin is what it is. Bitcoin is, and that's enough, as Beautyon would say. So again, I'm always a student. I'm no expert. This is never financial advice, but only what I'm doing, what I'm seeing, what I've studied and experienced over the last 20 years. Bitcoin, still hovering around the $20,000 channel in fiat terms over the last 6 months, really. Just dropped about 10% this past week in a bunch this last day or so, because we have crypto exchanges, again, altcoin casinos blowing up as they should. And that's great. There's no bailouts. This is beautiful. It's actual capitalism at work in the crypto markets. And it drags down Bitcoin because people are selling Bitcoin, because a lot of these scam casinos buy Bitcoin and they're selling it in the back end to try to pump the bags. And I'm not going to go into all that, but they use Bitcoin as the liquidity tool, as the safe asset they can use to then build their foundation on, and they go create these scam coins and all this garbage that then implodes on itself, and they have to sell their Bitcoin to get liquidity to try to bail themselves out. So that's why Bitcoin gets dragged down in a lot of this, but beautiful buying opportunities right now, which is amazing. And like I said, Bitcoin is greater than crypto. Crypto is garbage. It's zero. They're all going to zero. The SEC is coming after all of them. Many of them are being sued already. And again, this is not legal advice. This is not financial advice. Do your own homework. Please do your own homework. There is only Bitcoin. An amazing buying time is all these altcoins and scams are continue crashing all around, and this will continue. Bear markets do this. This is why it's amazing. You get to smoke people out and see who people truly are. Dollar cost averaging 2 to 3 times as much right now in Bitcoin as I usually do, and saving most of my cash in Bitcoin. I feel safer every day being in a finite money no one can corrupt or inflate away. With the craziness in the election, the political world, the world wars, the proxy wars going on, it's such a satisfying feeling. I feel safer every day, and I continue to buy bigger amounts if prices dip a lot, like this week. The real power lies in the fact when you own and custody, this is the important part, and custody Bitcoin in your own cold storage hardware wallet, you have become your own sovereign bank. No one can freeze you out of the system or steal or dilute your wealth. Massive. Please read that. That is the most important thing of all this. And here as well, if you leave your Bitcoin on exchanges, you will get racked. Not your keys, not your coins. Get them, buy them, and then remove them, send them to your cold storage. Please, I beg of you. Bitcoin fixes so many of the monetary problems the central banks have brought on us, like inflation, and many others, but this is the big one, obviously, people are dealing with. So we have about 20% in Bitcoin. Real estate, positive cash flowing rental real estate, still looking to refinance one of our rental properties and get more dry powder. Again, I've heard that before, that everything bubble is going to pop. It is popping somewhat, but I'm not going to hold my breath. I thought 6 years ago things should have imploded, and here we are. So buckle up, get prepared, hope for the best, but prepare for the worst. However, the market is getting destroyed by the rates rising. So it may be a great time in about 6 to 12 months to pick up some great deals on other stuff, and maybe stocks, real estate, stuff like that. For cash flow, looking to utilize a family member or a friend still to refinance one of our properties, who's looking to, maybe they have cash in the bank and they're looking to make a few pennies on the cash they have sitting in their bank, more than a few pennies, because that's what you're earning in interest right now if you're just holding it in a bank. So I would rather, again, hold cash short-term the next 12 months and have long-term debts at lowish rates paid off by our residents. And we have about 35% in rental real estate. And remember, this is important. The dollar is debt. Remember that. There's nothing backing it. So the further you can get into good debt, buying appreciating assets, you will win long-term as you are able to have good leverage and manage that leverage. Again, you have to be careful as government continues to devalue the dollar, which they have to. And refinancing real estate, pulling out cash tax-free, and invest in other assets. Like we talked about in phase 2 here, Savers get crushed by inflation and the minuscule interest savings rates. We have real negative rates, massive negative real rates in the teens. So you're losing 10 to 15% a year. You're getting 1% interest or whatever it is, 2%, 3% interest on bonds or your savings rates in the bank. But yet inflation, real inflation is at like 18%. So 18 minus 4, we'll call it, you're negative 14% a year you're losing. And people wonder why life's getting more expensive. Commodities. Gold, silver, oil, wells, uranium, copper, wheat, corn, etc. I haven't bought much in this area, but I know hard assets will be sought after and will take over in this next decade or two, because primary assets, this is the thing, primary assets are always a safe bet. Not the paper derivatives, but buying the actual thing, like an oil well or physical silver or gold. You have the actual asset, the true asset. Commodities, I believe, will be in a bull market over the next decade or two as derivatives crash and primary assets come front and center, because we need the real thing. Tertiary assets are the derivatives, the paper stocks, the paper of all this. This is built on top of primary assets. Again, I would rather diversify in the analog world, spread around different vaults and geographical locations that we can access in emergency. And we have about 14% in physical gold and silver spread around different jurisdictions. Paper, which is stocks, bonds, IRAs, stuff like that. We stopped buying EXP Realty company stock. And again, we're really battening down the hatches. I want to keep as much cash coming in as possible and then be able to deploy that in places that I control. The Fed is committed to crushing things right now, demand destruction. When they pivot, though, look out for these risk assets like tech stocks, the NASDAQ. They will go to the moon, in my opinion. Again, there will be time for stocks in phase 2 once the defensive positions and hedges pay out, like I explained at the beginning of this month's letter. Right now, we have around 2% in paper. Cash in businesses, this is the business we own, stuff like that, and the cash on hand. Looking to invest in private companies, obviously, is one of the big plays going forward, like multifamily and self-storage or mining operations for Bitcoin, if proposals make sense. There's some different mining stuff we're looking at right now. Some friends of ours have some different stuff, and we're trying to pull some cash into that, and we're trying to look at other mining operations that are using stranded energy, methane gas to mine Bitcoin, things, really some beautiful, beautiful things for the environment and also for cash flow and also for just future investment. Again, as you can see, we're trying to raise a lot more cash over the next 12 months or so, because I do feel like there are going to be some great buying opportunities. Cash is going to be upward of 20 to 30% of our portfolio soon, but Bitcoin kind of keeps that down a little bit as we keep swapping that fiat for Bitcoin. So cash on hand is also a good in case our long-term view of inflation is wrong. If we experience massive deflation and the dollar increasing in strength, then we will be able to use dry powder, cash, to buy many more assets. Expect to have more cash in the next month here as we refinance that rental, and still going to speak with our good friend Ron Sneller about looking at transitioning our term insurance to whole life at some point as well. We have about 29% in cash currently. And here's the inflation chart from Shadow Stats. John Williams does a great job talking about the true inflation, what's actually happening in the world, and it's scary. If we go to the 1980, before the government started really messing with the inflation numbers, the CPI and everything, you see here we're about 17%, 18% in true inflation if we are measuring it correctly. And right now, government says, oh, it's at 9. Well, it's double that. And truly, look at all the other assets. You've seen just inflation in all these other asset classes, and this is just kind of a basket, again, weighted. But think about all the things you buy in your life, food and energy, some of the most important things. Government doesn't even include that in their core CPI and their core inflation numbers. Think about how much of a joke that is, the things you use the most. So just look at the things you use the most and look at how much they've gone up over the last 2 years. Again, people wonder why. They're elected leaders, people we continually keep electing, keep destroying your life. And we just keep more of the same. It's almost like those syndromes people have of like, well, I got to keep getting taken to the woodshed. Just incredible, absolutely incredible. Well, how does this change? How? Again, the blue line is the real inflation. The red line is government inflation. In conclusion, overall, I think we need to continue watching for what the Federal Reserve does and what is going on around the world. The dollar keeps crushing. We need to watch the 10-year Treasury and the dollar relative index, the DXY chart, the Dixie. Those two charts, Gregory Mannarino has his own indicator, and he made it basically combining those two indicators in showing the what's happening in the world, basically. So taking the 10-year Treasury, if that keeps going up, the yield and the dollar strength keeps going up, things are going to really start crushing, or getting more and more crushed around the world. And it already has. Sri Lanka's collapsed, UK is collapsing, countries all around the world. Venezuela. Look at all these countries, and they're just getting crushed. and the EU is begging the Fed to stop raising rates. We're in an unbelievably crazy time, and we have to pay attention. We have to really pay attention to all this. And like I said, the big indicators are this: the debt market, the credit market, so the 10-year Treasury, and then also the dollar strength, the relative dollar strength to other currencies, which is the DXY chart. Have to watch those, and if those keep climbing, we're going to see really hard times. So those are the indicators to really look for. So that's kind of some of the secret sauce there as well, as I've learned over the last 10 years of watching the Greg Manarinos, watching the Mike Maloney's, watching all these guys, and how do they, what frameworks are they looking at things through? Really, really important. The United States will be one of the last affected because they can print their own currencies, but eventually song will stop and we will have no chair to land on. So eventually, the chickens come home to roost at some point. So this is not the time to get fancy and be trying to shoot the moon and make a killing. Be defensive and learn as much as you can, because great wealth will be transferred in the coming years, held from those who did not understand the global landscape to those who studied and were diligent. I can guarantee you that. This is how history has played out over and over again. Wealth is never destroyed, it's merely transferred, as Mike Maloney always has taught. This is why I've been a big proponent over the last few months of sitting on more dry powder. This education process is what we've been going through the last 12 years here, and we'll continue to share what we find and what we are doing. Trying to stay very liquid and don't want a ton of cash in the balance sheet for more than about 12 to 18 months though, because again, you're paying that option premium. So you're trying to balance deploying the capital and then having dry powder in kind of riding that line, because we're paying a real inflation rate, an option premium for of real inflation. The option, the premium is that, hey, I have the ability now to deploy the cash. We are paying that option premium, the option to do it, which is around 15 to 20% a year, the real inflation, like we said earlier. Keep in mind, again, when making an investment, it has to be beating 20 to 24% each year, as Warren Buffett says, to beat inflation, taxes, and things like that. So why I love saving in Bitcoin. This is the most important part of this, the last three sentences. I love saving in Bitcoin instead of US dollars because it grows compound annual growth rate at 100 to 150% a year on average. So that beats anything. I mean, again, it beats, unless you're, doing some of the things that like buying rental homes and rental properties and apartments with other people's money and then refinancing it and having no money in the deal and things like that. That takes a lot of work, energy, effort, and education. Then you can get infinite returns, but there's really not much else you can do to achieve stuff like that. That's very hard. You can flip businesses like that. You can leverage buyouts of businesses and turn them around and sell them and refinance them. Again, that's another way to get an infinite return. But there's, again, a lot of time, energy, effort, and know-how. And again, this is the most important thing. I only want to trade my finite time for finite assets. Right now, most of us trade our finite time for infinite dollars or infinite digits in a bank on a computer. That to me is insane. I don't want to trade my finite things for infinite things. That makes no sense. That's a terrible trade. You wouldn't go to the guy in the street in the corner selling his car and say, hey, I'm going to give you blades of grass, infinite pieces of grass or leaves or grains of sand. He'd be like, get out of here. But yet we do that every single day when we let someone pay us in dollars. They're worthless. They're literally worthless. And we save those things. That's why people are getting crushed. That's why the wealth gap keeps growing larger and larger and larger. The poor and the middle class save something that continually decreases in value, while the 1%, the top 10%, whatever it is, they keep buying assets, Bitcoin, gold, silver, real estate, whatever, and it keeps going up in value and hedges or beats inflation because they're actual tangible assets. Again, and Bitcoin, like I said, is the only finite thing other than time on Earth. It's the only thing. Everything else has a reproduction rate to it, an inflation rate. Bitcoin does not. So to me, as a human, when I'm looking at it, I say, what do I want to trade for my time? I can't buy more time. I can't get more time. It's finite. What do I want to trade for that? Well, only something else that's finite. Therein lies Bitcoin. Make an equal trade for yourself. Again, stay strong. Incredible times. Please study. Please do your own research. This is not financial advice. I appreciate your time, your energy. It's the most important asset we have, like we just said. Please let me know what you like about this, what your questions are, comments, concerns, and we will respond. And if you don't like it, please dislike. Let us know we can do better, how we can serve you better, serve you more. And we appreciate, again, your time and your energy. It's the most important asset we have. And we look forward to seeing you on the next one. And please go check out the last couple of videos as well about, I think, one of my most important videos, What is Money? Really November 2nd, a couple days ago. What is money? It's kind of the culmination of 10 years of learning, 12 years of learning business investing, and what I have learned going through this process. It's everything in an 18-minute video. So I appreciate you. Look forward to seeing you on the next one.